Well, AGI Greenpac has been a big mover. Over the last 12 months or so, the stock has moved nearly 150 odd percent. The numbers, on a reported basis, not too bad. 10% revenue growth, 37% EBITDA growth, net profit growth of about 20% as well. But if you compare it with the company's own history, seems like maybe there was some moderation in the rate at which the revenue grew at 10% versus the last 9 months of around 12.5% itself. We have Sandeep Sikka, who is the CFO of the company, joining us now. Thanks a lot, Sandeep, for joining in. And that really is the first question, revenue growth at around 9.7% has moderated as against the last few quarters. This against you expecting a 15 to 18% momentum continuing in the second half. What exactly has happened out here? Are realizations becoming lower? Because we heard that in the conference call of Diageo as well, where they said that, maybe glass bottle inflation may moderate going forward.
So if you see last year, the various input raw material prices which we use, like soda ash and the fuel prices, were on the rise. And around 50 to 60% of our contracts have a price adjustment clause, which is linked to certain raw materials. So as this input raw materials prices have started coming down, so although we have a volume growth, but in terms of the overall revenue growth, that output is not coming through. We had given a guidance of 15 to 18% growth, I think, in the last 1 year, which we will slightly like to moderate, considering the fact that right now the input prices have softened. Like soda ash prices have come off by almost 30-35% as compared to last year, and similar is on the fuel side. We are also facing a little bit of a demand fluctuation in Q3, which we feel in Q4 and Q1 should pick up as the beer season comes in play. We should get back into our numbers on the growth side.
So you said you are looking to moderate your guidance of 15 to 18% on the top line. What are you likely to end this year with? And margins, is there any change there? Last time you upped it to 24%.
In margin range, we have given a range of somewhere, I think, 20 to 23%. It depends quarter to quarter. And we have worked extensively on our input reduction of cost of production, like furnaces optimization and other things. So as a result of which, we have a higher EBITDA margin in the current quarter, which we feel that is sustainable. In terms of the long term, medium to long term, we feel that around 13 to 15% growth momentum we should continue to maintain. This is that we still are working on the product, product mix changes, upgrading of the product mix. We are trying to expand or debottleneck the facilities. Like one of the furnaces coming up for relining next year. We are again trying to, enhance the capacity there by 100 tons. So that adds around 10 to 12% capacity, to the company. And also 154-ton furnace, which is a high-end glass furnace. So there also the capacity utilization is right now 70%. So we have an upside there, which we can, maintain the momentum of growth.
Got it. All right. Hi, Mr. Sikka. Nigel on this side, and always good to see you in. Well, the next trigger for growth will come in from this unit that you acquired, the company, Hindustan National Glass acquisition. Yeah. You were telling us there were some court issues. You expected it to get ironed out in 2 to 3 months. Has that happened?
So there were two types of issues which were filed by various parties against either the HNG or the resolution professional. So we have won those cases at NCLAT level in the month of August and September. The matter is now pending before the Supreme Court. Unfortunately, we are not getting those schedules on the Supreme Court, which we feel that once we have it, the disposal of the cases should be much faster. So we merged as the largest bidder with the highest price bid, and we have all the approvals in place like CCI and other stuff today with us.
When do you get all approvals, Mr. Sikka? Because this is going to be a big trigger. As you told us last time, maybe you'll have to put in around 500 crores of capex, but you can generate revenues of close to 3,000 crores from this asset. So by when do you think it will start contributing?
So matter is right now in front of Supreme Court. It's very difficult to predict, the litigation time involved here because courts take their own time in terms of disposal of the cases. So, but what I can say is once we have the clearance from the Supreme Court within 3 to 4 months, we are ready to implement the whole acquisition.
All right. So the if is not a concern, it's the when which is a concern. So obviously that is something that, we will monitor. Mr. Sikka, because this is depending on this acquisition and the completion of this, you had given us this 5,000 crore target in terms of revenue by FY25. Safe to say that that has been pushed by a few months, and maybe sometime in the middle of FY26 you will reach that run rate. And what happens to your $1 billion revenue target as a result of this?
So the whole, the guidance of giving 5,000 crore plus was definitely linked to the HNG acquisition.
Yes.
Because we are not doing internal capex right now, considering the fact that our fund deployment will be towards the acquisition. We feel that it should happen in next 4-5 months, based on the current scenario, which on the litigation in the Supreme Court. So basically, we may miss a quarter or so, or maybe 6 months max, in terms of achieving our numbers. But the run rate of that flow will start flowing in here, of that 5,000 crore.
Okay, all right. What about your Telangana unit? At what utilization levels are you functioning at, and do you have a capacity addition plan?
So we are right now, Nigel, at almost 95% plus capacity utilization.
Okay.
Few of the furnaces, we are even going beyond, 100%. That's how the whole internal efficiency is coming through.
Okay.
We are using additional methods for enhancing the furnace capacity. And we have one more furnace which is coming up for relining, because the timing is very important in terms of the whole relining. So this furnaces, they last for almost 10 years. So when a new furnace is coming up, this is around 275-300 tons furnace. So we are trying to expand the circumference of the furnace by another 100 ton. So then instead of 300 tons, we'll have 400 ton furnace, which exactly we did last year for another furnace, and which has been very successful. So we are trying to internally de-bottleneck the capacities in the interim until we get the new, asset into the game.
So X of H&G, you can organically still grow 13 to 15% is what you're saying, right? Because of these de-bottlenecking exercises that
One is de-bottlenecking. We still have some capacity which is available in terms of 154. And then upscaling of the product mix is a very important game which we are trying to do now.
All right. We'll have a conversation with you during the quarter as well, and when we get an update on the H&G acquisition. Thank you so much, Mr. Sikka, for always joining in and giving us an outlook on the business going ahead. With that, wish you good luck. All right, take a short break, come back, tell you more on the markets and individual stocks on the other side.